So morning guys, this side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting and also a venture capitalist. Standing today when we are shooting this video at around 2 a.m. 4th June 2020, there is a hell lot of action happening in the market. And it looked like that the Indian market is completely dominated by operators. Completely dominated by operators, and they have clearly made a mindset that whatever information is coming which is covering the fundamental piece about the economy is immaterial, and they are not even bothered about the I would say the credit rating impact on the Indian government. But anyways, we are not bothered because Treasury Consulting Hedge Fund is completely prepared. We were prepared at 8,800. We were prepared at 9,000. We were at 9,500, and even today when it is closer to 10,000 or little closer to 10,100, we are prepared. We are not bothered. But the problem do not ends here, because we understand one thing, that everything cannot be managed by operator. There is one thing in the life which is known as fundamental, and eventually that thing comes to a reality. That is also a fact. Example, Indian banks. Indian banking system sitting on a huge non-performing asset, and almost every quarter they writing off or wrote off several hundred crores worth of non-performing asset. Everyone understands that the complete gimmicks behind that, but still the non-performing assets in India are not decreasing, rather they are increasing. So this is very important, what we clearly need to understand and what we clearly need to see, because Indian financial system is sitting on a time bomb, and now fortunately or unfortunately, Moody started acknowledging that. And once Moody starting acknowledging that, we do not know how much time Standard & Poor and Fitch would take to acknowledge this. We do not know. But sooner or later, all the three credit rating agencies will start acknowledging that. That is also a fact, and we cannot run away from that fact, even if operators take the market to 15,000. As simple as that. Now, as you know that we are a person of data. We talk data because we always substantiate our fact with the data. And let's talk data, because data is the most important element of the life. So this is the Moody's complete credit rating analysis. 8th January 1998, the rating was Baa3. Outlook was on watch. 19th June 1998, it is Ba2. Downgrade. 14th November 2002, which is exactly 4 years from that, rating remains same, Ba2 on watch. 3rd February 2003, Ba1, upgrade. 16th October 2003, it's Ba1 intact. 2004, 22nd January, Baa3, and then 9th April 2015, it means there is a complete gap of 11 years. Note this, complete gap of 11 years, Baa3, then 16 Baa3, then 17 Baa2, then 19 Baa2, and then Baa3, which is one notch downgrade. If you look at the Southeast Asian economy, which includes Singapore, Thailand, Dubai, Hong Kong, Philippines, then India stands the lowest credit rating as of now. And this credit rating has started impacting the ecosystem. People agree or do not agree, that's a different thing, even if market takes to 15,000. Even today on the TikTok, I clearly explained to many people that when you read newspaper or when you read economics data, then understand two things very carefully, and you need to learn the differentiation between these two things, which is that what is fundamental and what is operator. When we talk about ourselves, when we read newspapers and everything, we talk about fundamentals. When we enter market, we talk about operator. So example, Indigo. I know that Indigo posted a loss of closer to 900 crores. The aviation sector is not the same sector what it used to be. Now they are grappling with lot of cost. The cost is rising, lot of safety measures DGCA is asking to deploy, so their cost will definitely rise. So example, I don't know, example, daily Mumbai ticket charge by Indigo is 10,000, assuming. I'm even assuming that on 10,000 they are making a profit of 20%, so say 2,000, assuming. But now it is not 2,000. It is definitely not 2,000. Indigo himself aware that it is completely less than 2,000 and maybe lesser than 1,000. So do not expect the aviation sector to perform the same way it did. But having said that, we need to understand very clearly that once we enter, this is the fundamental piece. Once we enter the market, we see the operator piece. And what is the operator piece? A stock price which was 960, all of a sudden it went to 1075. That excellent. All of a sudden it went to 1075, and you will see tomorrow also when Indigo stock pump up. Now what does that mean? It means that as a same individual, you need to, have two different mindset. Now one mindset is the fundamental mindset and one mindset is the operator mindset. But remember carefully guys, that eventually operators needs to acknowledge the fundamental mindset. No country of the globe can be an exception in that regards, even Singapore. So that acknowledgement has to be there. No country can run from that acknowledgement. So let's talk another set of data before we move further. And this set of data is more worrisome for me. Like on the TikTok, I have started talking about that the cut in the Indian credit rating would be impacting the QSD, which is known as quality spread differential. I'm damn sure that 99% of the people, those who are watching this video, they do not know about what is quality spread differential. And that is pretty serious to me. But today we got an article in a newspaper which is foreign banks may sell Indian loans. I'm damn sure 90% of the people, those who are watching our videos, they do not read newspapers, and even if they read business newspapers, they do not know how to comprehend this. Let me read this for you. A clutch of foreign lenders with a large exposure to Indian corporates may be forced to trim their loans portfolio after Moody Investor Service downgraded India's sovereign rating. Foreign banks are already aware of the impending risk and they have begun negotiation to sell their loans portfolio, including those names to some of the best rated corporates in India, according to the industry expert. Most foreign banks follow the sovereign ceiling policy practiced by the major rating agencies, which means that if there is a downward revision of the sovereign rating, the credit rating of the corporate debt issuer of the country will fall in tandem. And this is what I said on the TikTok, but I'm damn sure people not understood it, and our media never talks about. In fact, they do not understand that. A senior banker at a large foreign bank, by the way, he said a senior banker at a large foreign bank. How many foreign banks we have in India? In India, JP Morgan, Deutsche, Barclays, UBS, Citi, Goldman, and Bank of America, Standard Chartered, hardly 10 or 12. So don't give a senior, I know most of the bankers. A senior banker at large foreign banks said request anonymity that many lenders will be forced to sell their profitable asset if India risk increase. These are top corporates in a country. We are hoping that there would be good demands for Indian bank. Right? And the worst is here. Now I will read for you. Moody downgraded India's sovereign rating to Baa3, which is one notch above the junk status. One notch above the junk status, and now at par with Standard & Poor BBB minus rating. As at 31st March 2019, the foreign banks had an outstanding credit of around 4.03 trillion, which is 4 lakh crores, closer to 1.5% lower than the previous fiscal year as per RBI data. Public sector and the private sector bank has an outstanding credit of 57 trillion and 32 trillion, which is approximately equals to 90 trillion. Which means that the foreign banks only 4 trillion, while public sector and private sector bank total 90 trillion. Can you believe that? Can you believe that? It is roughly 22 around what? 24 times, close to 23 times. Can you believe that? The total portfolio of foreign banks, is one side, and the total portfolio of private and public sector bank is on the other side. 4 trillion and 90 trillion. 90 lakh crores. And guys, do you know that if I compute the 1 bips impact of this 90 lakh crores, then how much it would be? Use your calculator. Ask your Hindi media to compute the 1 bips impact of this 90 lakh crores and let me know. This is known as immunization. Let me read this some important things for you. As at September 2019, there were 46 foreign banks who were present through branches or wholly owned subsidiaries, and 37 banks only have the representative offices. This is what I said. This is what I said. 46 minus 37, which is how much? 9. And this is what I said. Hardly 10 foreign banks are in India on a complete operational level, which includes JP Morgan Chase, Deutsche, Barclays, Standard Chartered, HSBC, BNP Paribas, Bank of America, OCBC, SMBC, and Goldman is not having much presence, and Credit Suisse. Hardly 9 or 10 foreign banks are there. This is what I said. It means that the Moody's cut the rating few days ago, and the impact of that ratings had started occurring on Indian banks. This would surely hit. Now you must be thinking, if foreign banks will start selling Indian loans, what would be the impact on Indian financial system? This would have severe implication on Indian financial system, in the sense like, if today I assume, I am not quoting any name, I hope you guess that one Indian corporate is well known of taking funding from dollar market. They are a big boy in dollar market, and it's a big conglomerate. I hope you understood whom I wanted to name. Now, if they go to market for dollar funding, the QST component will rise. Now, this company will now enter into the Indian market for funding. But when this company enter into Indian market for funding, the total availability of the money is intact. And the government already doubled their, their borrowing targets. Now, this corporate will get more money or less money, we don't know. But what about the small corporates? They all are gone. And this is known as, guys, crowding out. Note the date. In 2018, we forecasted about Yes Bank, about SoftBank. And you know what happened to SoftBank? Note the word on 4th June 2020. I'm telling you that the biggest problem for RBI in another 1 year is the crowding out. And the only solution we have to prevent this crowding out is the monetization of the national debt, and we already covered in our YouTube videos that monetization of the national debt is a sin in finance. It's a sin in finance. So this is the first that the credit rating cut of the Moody's is having detrimental impact on India. and that detrimental impact or the negative repercussion on India has started. And guys, these are the foreign banks. I'm not talking. It's a data which is talking. Moody is once again in action. I think Moody is in action, we need to say. Now Moody downgraded the Indian lenders. Moody Investor Service on Tuesday downgraded the rating of the state-run SBI and the India largest private sector lender HDFC. Oops! Guys, your rating has been downgraded but your share price rose. Your rating has been downgraded but your share price rose. Today, HDFC crossed 1000 barrier. Can you trust that? And still people asking me why Nifty is not heading to 6000. I don't know, are these people really blind? Or do I need to show them the mirror that they are actually blind? They are still asking why Nifty is not 6000 when the Moody's cut the rating of two largest lenders, SBI and HDFC, still their pricing are up. And guys, the list include SBI, HDFC, Bank of Baroda also rising, Bank of India rising, Canara, Central Bank, Export Import Bank not listed, Indian Overseas Bank, IndusInd Bank, Punjab National Bank, Union Bank. Bank Nifty is rising in short. Straight. So where does we can see the impact of this rating cut? Where we can see that? It's a sheer example of the fact that the operators have made a mindset that even if rating, God forbid, downgraded by 2 notch, it does not matter. We have decided that market is heading to 12,000 Nifty and probably 25,000 Bank Nifty. That's it. Because we do not read this newspaper, we do not know anything about that, neither we know what QST stand at, and most of the people do not understand what foreign banks selling at. What foreign banks selling at. And this level of discussion will never happen, never ever happen in our media because they are busy in few scripts which is already being shared with them. And guys, in the third section, Moody gives a data which can give shivering to anyone in this globe. Moody said, let me read for you. Indian sovereign rating downgrade by Moody Investor Service, although expected, puts the spotlight on the credit metric of fiscal health, which is debt to GDP ratio. Debt to GDP ratio is the amount owned by a country in proportion to what it produces. For example, every 100 of gross domestic product, India owed 72 to the market. While the debt to GDP ratio is set to worsen to 84% in 2020 to 21, 84%. The same data also concludes that from 2012 till 2019, the average emerging market and middle income economies debt is from 30 rose to 37% to roughly 55%. So the average emerging market and middle income debt rose to 37% to 55%, while Indian debt to GDP ratio continues to be 67.7 to around 70%. And what they said, we already know. And this is one of the important metrics. This is one of the important metrics. So Moody is in action and operators are too in the action. And this is what I explained on the TikTok, that when I enter the market, I keep these numbers in my mind, but I trade like an operator. And that's more important to me. Simple. Because if I do not trade like an operator, then I will never make money. And guys, the big data is pending. And here we go. The extension of the repayment moratorium by RBI from 31st May to 31st August is a credit negative for liquidity profile of NBFCs. Moody said, NBFC manage their liquidity primarily by matching outflows, mainly by debt payments with inflows which they get from customers. The moratorium on the customer loan payment has led to significant decline in the cash inflows and adversely impact the liquidity of these lenders, which is also known as immunization. Well, the author of this article do not understand immunization. If he would have mentioned that immunization of NBFCs is at stake, it would have been better. The article suggests that the government of India, BA2 negative, and the RBI have announced a series of measures to alleviate liquidity stress at non-banking financial institutions. However, the measures have been mostly ineffective, the note said by Moody, pointing out in the most recent measure announced in May, and they also raised an issue of the guarantee which they are giving up to 30,000 crores. To conclude, the impact of the extension of the moratorium will be different for public sector and private sector banks. In general, much have been more open to offering, public sector banks have been more open to offering moratorium than the private sector banks, so on and so forth. So to cut the long discussion short, the Moody is in action. Number one, the credit rating of India has been downgraded. It is one notch above the junk. And Standard & Poor rating is BBB minus, which is already junk. Indian credit rating is the lowest we have in the Southeast Asia if we compare with Singapore, Thailand, Dubai, Hong Kong, Philippines, and all these nations. While it started impacting the foreign banks, they have started concluding or selling up of the loans which they have given to Indian corporates. I don't know what they were up to, for what they were waiting for till now. But the number does suggest that the Indian banks, the foreign banks in India, total value is around 4 trillion, while the public sector and the private sector cumulative value 90 trillion. That is excellent, which is around 22 times, a little closer than 22 times. And more importantly, the Moody's also downgraded the ratings of Indian lenders, but does it really matters? But in long run it do. And last but not least, the Indian debt to GDP ratio is set to worsen 89% in 84% in 2021, and approximate for 20 is around 74.3%. The fiscal condition of India is going worst every passing day. This raises severe concern on the 20 lakh package the government offered, and a lot of apprehensions we do have that this 20 lakh package, the only 1% of this 20 lakh package is fiscal support and rest is the liquidity support, which is a kind of loan. Several economists conclude that it is less than 1%, but I think it is closer to 1%. Fiscal health is a concern for an individual, is a concern for a government, it's a concern for any big hedge fund or maybe any big bank. It should not be taken as lightly. Moratorium is a good thing, but it definitely impacts banks. SBI, Axis, Kotak, IndusInd, almost everybody is cutting the deposit rates. We already made that video. I know that still many people not understood this video and they will click the down button on the YouTube, but who cares? This is our presentation on the Moody, and we feel that this would surely have an impact on the market. The downgrade will give bears more push than the bulls, but more importantly, till what extent the mutual funds would be able to hold, as a domestic institutional investor would be able to hold or buy positions in India, that is what we need to see. But more importantly, things is turning tweaky and tricky. Let's see how this shape up. This is what I wanted to say in this video. And one thing which I always missed in the last few videos is that whenever you see our YouTube video, go to the discussion section in the last. In this discussion section, you will see the links, the new practice which we set up, that all the links of our company, LinkedIn, YouTube, Twitter, WhatsApp and whatnot, all these links will come in the discussion section. And we continue to upgrade these links. So our Facebook Connect link and everything, all these links will come here. So there is no point to come to us on the WhatsApp regarding that. This was our outlook on Indian fiscal health, which seems very tricky. And last but not the least, we do not know as and when Standard & Poor come in public domain and say that we will also cutting. We do not know anytime this time bomb can explode. Be careful. Don't take much positions in the market. Even if you are taking positions, square it up in profits. Don't go greedy. Remember that a balloon can take intake of any air up to a level, and after that it bursts, and currently it is a big balloon. In the history of mankind, it never happened that all the indices, exchanges, those who went uncorrected for a period of time remains uncorrected. Correction is an integral part of every exchange, and here also do expect a big correction. Have a good time. You know my mobile number, which is +91 9899242978. Have a great time. We are back on YouTube. More videos on the card. At onset, we thank you very much for watching this video. The purpose of the Treasury Consulting Group YouTube channel is to spare a lot of knowledge, and that too practical knowledge in the public domain. We feel that the current education system in majority of the countries of the globe believes in degree, but we believes in knowledge. People often ask what Treasury Consulting does. Treasury Consulting is a Singapore multinational headquartered group wherein we currently have 3 legal entities, which is Singapore, India and Hong Kong. Eventually in this year we are planning a British entity and 2 OBRs, which is Overseas Bank Representative, which one in Germany, one in Greece tentatively. On knowledge front, we do offer a lot of stuff. We are having our fixed income platform www.fixedincome.global, wherein around 62 plus live trading desks are there. And by December 2021, which is approximately 2 years from here, in a phased manner, about 100 plus, which is about 38 more will come. So in another 2 years, around 100 plus desks would be live. We do have around 200 plus training courses covering various topics which are available live on our fixed income platform. Currently we offer in 5 parts, which is functional trainings, forensic trainings, regulatory trainings, information technology trainings and technological trainings. More trainings are coming. Apart from that, we do offer MTM desk, which is mark to market of derivative, consultancy, project implementation, treasury management system, almost everything which we are coming, and more product domains are coming. On a knowledge basis, Treasury Consulting hold our Hedge Fund Academy, which is 182nd platform. We hold our Audiobook Academy, which is known as Audiobook. We are coming up with our OTT platform, which is over the top, which we titled as TRFX. And it would be completely different than we have Amazon and Netflix, due respect to both companies. Our investment bank, hedge fund, it is also coming. More importantly, we operate 44 plus WhatsApp groups, and where we cover the books, the magazines, the bank research reports, I would say the GST, the corporate finance, the educational videos, the treasury, derivative, financial markets, synthetic derivative and whatnot. All these 44 WhatsApp group are linked with a thread. So if a member of one group wanted to join another group, he can freely join that group. There is no. We do operate almost daily derivative email. You are welcome to join our group, but once again this group is subject to invitation and we will see your profile, we scrutinize your profile. So it is not for all, it is based upon the people, those who hold good profile. But if you have a fire in you and we see that you wanted to learn something different, we will definitely give you an opportunity to join. More importantly, my mobile numbers, which is +91 9899242978. My alternate number +91 9818485155. Both are in the public domain. They both are on WhatsApp. You are welcome to WhatsApp me at any point of time. Do not forget that we are the only platform when it comes to private placement, and there are so many things we are offering in private placement and many things which we are adding. Overall, Treasury Consulting is currently a Singapore multinational headquarter group, which would soon be London headquartered group, and Singapore would be Southeast Asia headquarter for Treasury Consulting. Our fixed income platform www.fixedincome.global cover a lot of information. We once again thank you very much for watching our videos, and we assure you that our both YouTube channels, which is Foreign Exchange Maverick Thinkers and which is Treasury X, and our TikTok channel would continue to grow. We are expecting around 6,000 plus videos only in 2020 and around 5,000 plus videos next year onwards on YouTube. And God willing, by 2020 December, we would be crossing hell lot of videos. Have a great time, and once again thank you very much. And our ambition of becoming or serving you or giving you a knowledge which books even do not give would continue. Have a great time.